Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, here we are on Tuesday, February 6th. We're going to take a look at Snap today. So with earnings coming up, I came in and added some levels to the chart since we've had this big run-up recently. I guess we can start there. You know, my question about the run-up recently is sort of threefold, I guess. One, I often worry that even if there's an on par or a good earnings report, that folks or the market in general may turn negative on those earnings because it feels as though it's priced in so much, right? It's about doubled or more the price in a pretty short period of time, you know, basically between earnings to earnings. And, you know, I just wonder how much the market's going to feel like certain results are priced in. So that's one thing. The second thing is, you know, sort of the flip side of that, which is if the catalysts were sort of pure enough, if you will, to drive the stock up this much in a relatively short period of time, you know, a decent or a mildly good report may just sort of further exacerbate those positive feelings that drove the stock up in the first place and might just sort of serve as a little pat on the back and, you know, keep going, rocket ship. So that's sort of my question. Which way is that going to turn, just sentiment-wise? Of course, it's going to rely on what the actual report says, right? Is the report sort of underwhelming? Is it on par? Or does it beat the expectations? That'll be the first thing, of course. But then, you know, I do feel that there can be sort of an opposite reaction, even though I do also feel like a lot of stocks that have been coming in so far this earnings season have been relatively on point. There hasn't been that thing that we saw a few earnings ago where people would report good earnings and they would still just, you know, get crushed because they felt that the stock had been run up, or they'd put in sort of underwhelming earnings and they would still get run up because they felt like the stock had been beaten down so much. So I feel like things have been more on par recently, so we'll see how this one turns. Now, the third component that I said, you know, is threefold. The third component is purely a chart component, purely a formation component. So you see this big pole that we put in here, and now we're putting in a nice flagging pattern. So just in a standard environment, you would tend to look at this and say, okay, we have, you know, some topping out here. We have some higher lows getting put in here, and we should be flagging out and continuing on to the upside. Now, you know, will just a simple chart formation dominate something like an earnings call? Probably not. That's why I say sort of like in any other environment, you know, that's what I would anticipate. So that may not play a big factor here, but if things are sort of teetering on the edge one way or the other, it might serve as sort of like a point to help put something over the edge. Now, levels wise, the nearest in resistance level that I see is 1786. I know it's just shy of the 1790, but it, you know, it goes back here. I scrolled left to put these in, of course. And then the nearest in support level, this is probably not actually the nearest in support level, but the nearest in strong support level that I have, 1587. So there's a huge percentage range in between 1587 and 1786. You know, $2 in a range in a stock of this price is a huge percent. So, you know, I didn't want to clutter the chart too much. And so there are some sort of, you know, drops here. There's some big percentage gaps, and that's why. So just know there's going to be some additional price action in between, but I felt that these were the strongest levels. Now, if it does drop 1349, there's a gap here that it could get into, and it would fill that at about 1309 or so. So not the biggest gap in the world, but, you know, it's quite far down from where it is now. So just in the sense of, you know, if it does sort of struggle with that 1587, if it looks like it's going to flip it to resistance, you know, does it sort of get drawn down toward that 1350-ish level where it sort of has the danger of falling into a gap. And there's sort of gaps all over the place here. You see another one Down here, this grayed out area, it would fill this gap at about 1138. So, there's a bunch of levels in between here, all within the dollar ranges, and, we'll see how it wants to react. Now, there's sort of an equal but opposite situation to the upside. If it can get movement over 1786, again, I have a pretty big jump. Not quite $2, but darn close to 1964. And then I would have a gap fill at 2171. You see this big gap here that it left. And, just know there's a ton of gaps on here. I mean, there's gaps way up here in places that feel out of reach for the time being, at least. But we'll see how it plays. It's not so far away, considering it's often had large reactions to earnings or to other catalysts even. So it can have these wild swings one way or the other. And if it does have a wild swing up or down, there are gaps in both directions that could certainly come into play. So I'm interested to see how that rolls out. Now, on the Thinkorswim side of things, we see a relatively recent trigger and fire that didn't do much, and then a couple blips of triggers. So I'm curious to see what this amounts to. It's doing that as it's pinned to the mid-range of the channel. So again, any other situation, I'd be looking at this going like, this is a really great setup. Like I said, you clearly have this flag, and you have this triggering that's sort of like, I don't know, it kind of came and went, and then I don't know what to make of these like individual pings. That's sort of anomalous. We don't see that very often. But it's doing that while it's pinned to the mid-range of the channel. You see back here, this brief trigger and fire set off that huge run-up that occurred after the last earnings here. So, earnings is such a big thing that it can throw any of these formations, any of these indicators totally askew very quickly. So, not wanting to lean on them too much, but just to say, in any other situation or environment, that's what I would be looking at, and I'd be going like, okay, I like what I'm seeing here. So we'll see what happens, but these are the levels. I try to focus on the levels for earnings because, big moves one way or the other, if we've put in the levels in a big enough range, which we have levels down to 1040, we have levels up to 2171, if it's really positive, that may not be enough. You see what Palantir is doing, for example. And, it may stretch above 2171. But, if it does, we can always come in and put in some additional levels, maybe around this 24-ish area. If folks are interested, just let me know. All right, folks, I hope that your trading week is off to a good start. And as always, I appreciate you watching, and I will see you in the next video.